Hello and welcome to another update video about Ethereum. So on the Ethereum chart, let's first look at our base case on the larger time frame. We're going to zoom out and take a look at the 4-hour chart. Then we're going to zoom in to the current price action on the hourly 30-minute chart and talk about the short-term bullish, short-term bearish scenario. Current situation or assumption is that price completed a wave 1 in April, came down in an A wave into the support area on the 15th of June, rallied in a B wave and is now coming down in a C wave, which would be a 5-wave move. So one more low is required. As you can see, we already completed a wave 1, a wave 2 and a wave 3. What we're currently doing is the expected wave 4. Price pretty much worked through that wave 4 as expected. It typically takes a few days. It took its time over the weekend, probably hasn't completed it yet. Yesterday I highlighted we should get another drop in a B wave. So we see that right now. So let's zoom in a minute. The current situation is as follows. So we should get one more low eventually in the wave 5, because typical Elliott wave structures would suggest that the C wave should have 5 waves. In crypto, they sometimes only have 3. Then we call it a WXY structure, but I have no evidence for that. That would just mean in practice that Ethereum's price would turn around early and rally higher earlier, but it takes a break above 1723, above resistance, to confirm that. So if price breaks now above 1723, then we can start to talk about that a low is in. It would not be final confirmation, but we can start to talk about that. At the moment, I haven't got even any kind of indication that a low is in, other than the pure possibility. Okay. So one more low is expected. If we get one more low, 1535 and 1457 will be the next Fibonacci support levels. Below that, we've got the area around 1200 to 1300, but that's really the last line of support between, okay, a potential third wave rally in bull mode, yeah, and new bear market lows. So that is really an important line of support. I always think you need to know that, because a sustained break below 1200, I've got no support level left other than psychological $1,000, but they would likely break below 1200. So if we zoom in, take a look at the short-term bullish and short-term bearish scenarios. My preferred scenario, as I already outlined over the last few days, would be here a clearer ABC structure. So we've seen that now. In yesterday's video, I showed you here this potential A wave down, B wave triangle with an expected C wave to the downside. It came down a little lower in the end, broke briefly below the 1605 support, but the support did hold. We never had a sustained break below support. Because we didn't get a sustained break below support, it is technically possible that this was the B wave. So A wave up, B wave down, and the C wave to complete the wave 4 now on the way. Key to understanding this is a wave 4 is typically a 3-wave move. Typically, in an ideal world, a 3-wave move. And therefore, we waited for a deeper B wave. Support was highlighted here on the chart, and the C wave higher could be unfolding right now. Might be that we've seen a small 1-2 setup already, and this could be a 3rd wave. But price would now need to follow through, and in my opinion, would need to reach, well, at the very least, 1688, better 1720. Also, if we take a look at the Fibonacci extensions, what is a key target? And by the way, this is the short-term bullish case. Short-term bullish doesn't mean we're going to break above 1723. It would just mean that within the current base case scenario I showed you, which should lead to another low, we short-term will go a little higher. And also here, the 1-to-1 ratio, the 100% extension, pretty much points towards that 1720 level, 1725. Again, 1720, it's a sustained break is needed to really unlock much higher price potential and to indicate that a low is in. But until then, we focus on lower, and it might be a possible target for the C wave, however. This is my primary scenario, the preferred scenario, the short-term bullish scenario, as long as, that's the condition, yesterday's low is holding at 1590. If the 1590 level breaks, and we are now heading down, and price breaks basically below 1590, then we are probably already in the 5th wave. Then wave 4 likely finished here as the triangle. So the triangle finished not as B wave, but as wave 4, which is possible as well. And we're already heading down. 1, 2, should break down basically now in a 3rd wave, then there should be a fourth and a fifth. This would be the wave 5, how it would unfold. We could be in this wave 2 pullback, so wave 1 down, wave 2 pullback, but it should really not go much higher because then it would invalidate this. Then a third wave down, a fourth wave, and the fifth wave of wave 5 down to finish it off, maybe around 1450. This scenario, however, would have to play out as an ending diagonal because the move down of yesterday's highs, or of the Monday highs, was a 3-wave move. So it was a correction and could only really play out then as an ending diagonal in which each of the subwaves are corrective. So this is the short-term bearish scenario and would be confirmed below 1590. This is currently what we're looking for on the ETH chart. I think those are the levels that are relevant today. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.